Okay, good afternoon and good evening, Marshall Reddick investors. Thank you so much for joining us, taking time, I'm sure, out of your busy afternoon for what I can ensure is going to be a really interesting and exciting webinar. Asset protection and insurance for rental property. We have our preferred insurance agents, Stan Dreckman and Michael McAllister, who are going to be joining. And I know every time I hear them present, I learn something new. So really excited to dig in deep. I'm certain that all of you are going to learn something new as well. I know this afternoon and yesterday as well, calling through our attendees, that we have both experienced investors and those new to investing on the webinar tonight. So before we get into our main topic, just want to go in a little bit to who we are and what we do at Marshall Reddick Real Estate. Marshall Reddick Real Estate offers three primary services. First and foremost, we are a full service real estate brokerage, helping our clients to buy and sell real estate in 16 markets around the country. We're also a private money lender, allowing our clients to be both the lender and the borrower, depending on their specific needs. And we're a property manager. We manage our clients' investment portfolios. Essentially, we have carefully selected teams in 16 markets around the countries, in addition to all other team members needed in a real estate transaction, like Michael and Stan, our insurance agents, to help you seamlessly identify and invest in a specific investment property or investment properties that meet your specific goals. Myself, real estate advisor and realtor. I've been with Marshall Reddick Real Estate for over 3 years now. My background is in contracting originally, and I have my degree in finance. Here at Marshall Reddick Real Estate, I've helped countless clients buy investment properties, buy primary residences, sell investment properties. I myself have bought and sold. So I'm coming with a diverse experience and background to help my clients ultimately, like I said, evaluate properties and markets where those properties may be to hit your specific goals. And when I say hit your specific goals, that's really where we start in working with our clients at Marshall Reddick Real Estate, understanding who you are, what you're looking to accomplish, and really quantifying those goals. Are you looking for cash flow? Are you looking for appreciation? When are you looking to retire? Based on your specific situation, each investor is different. We can determine a type of property and a market which is best going to help you accomplish your specific real estate goals. And equally as important as what and where you buy is who you work with. And here at Marshall Reddick, one of the biggest values we provide to our clients is having a carefully vetted team in each and every market that we help our clients invest in real estate. And like I said, a key aspect of that team includes Michael and Stan. Because asset protection, which we're going to learn today, is incredibly important and valuable in real estate and investing. Quick snapshot of the 16 markets that we're in across the country. 8 states, 16 markets. We help our clients to, like I said, buy and sell in each and every one of these markets. Now, it's just important to note that these markets are not chosen at random. We research very carefully. We very carefully vet our team based on these 7 criteria. These 7 criteria that you see here are ultimately going to determine whether or not we will or we would recommend this market as an investment. The numbers have to make sense, and the numbers have to be justified by the entire metropolitan area. It needs a strong job market, low total vacancy rate. It needs to be a diverse metropolitan area, not too dependent on one company or industry. Of course, it needs to be affordable, and more importantly, that the rent to price ratio makes sense, especially on paper, so that you are cash flowing every month. It needs to be landlord friendly. Of course, California may be the exemption there. Strong academic institutions. And then I would say the most important is reliable property management, because a bad property manager can very quickly turn a great investment property into a non-performing asset. And like I said, here at Marshall Reddick Real Estate, we have phenomenal property managers, insurance agents, lenders, realtors, real estate advisors, everyone you need to evaluate and acquire investment property. And now, before we get into our main topic this evening, we're going to take a quick poll just to understand who we have on the webinar this evening, understanding your investment experience. Just understand these are completely anonymous, so please do participate. Like I said, it helps us understand our audience this afternoon. All right, we'll give everyone just about a minute here. All right, just about 10 more seconds. All right, closing it up, and let's take a look at our results here. Very evenly spread out across the board. We have first-time investors, those with smaller portfolios, and those with larger portfolios. So really a great group, and no matter where you are in your investment journey, you are going to learn something tonight in regards to asset protection. I'm sure that will benefit you and your portfolio. So without further ado, I want to introduce and welcome Stan Dreckman and Michael McAllister. We have been working with them and their team for over 20 years. Their customer service is phenomenal, and the insurance products they're able to offer our clients provide our clients with adequate asset protection, which is so fundamental. So without further ado, I'll let you guys take it over.
All right. Thank you, Daniel. This is Michael McAllister sitting here with Stan Dreckman.
Yeah, and this is Stan Dreckman. Looking at you with my Mona Lisa portrait. Anywhere you're sitting, I'm looking right at you. We're really excited about talking to you guys tonight. We are very experienced insurance brokers. Michael brings to you a very unique aspect in that he's not only getting real good at the insurance game, but he has over, 20 plus years of property management. So he understands the property management, the investor situations, and between the two of us, we have over really 40 years now of combined insurance experience combined with real estate. So we're here and we're excited.
Yeah, and so at the very last part down there, you can see that we speak real estate and insurance, and we understand the Marshall Reddick model. A lot of what you're looking to do is to protect your asset and to cash flow. And so understanding real estate is one of the most important parts that we could do. And if I can get the next slide to go.
There we go.
There we go. All right, so basic purpose of your insurance, as we all know, is to keep you safe from losses and to help you rebuild once an event happens. None of us want an event to happen, but they do, and that's what we have insurance for. And today we're going to go over what a policy should look like and how to prevent yourself from taking a huge loss and not being properly insured. Okay, so a landlord policy, what does it cover? Well, your landlord policy is going to be between 1 and 4 units of a family home, and we're going to insure your primary structure. It'll also cover some of your detached structures, and you're going to want to get contents on that. A lot of policies don't offer it, but that covers your refrigerator or your microwave, dishwasher, stove, and loss of rental income you can see there is set at 10%. That's the basic setup on most policies. We'll get into that a little more later. There are times you want to increase that, and we'll talk in depth. And of course, your liability. That covers you when you're sued. Issues like that, you really want to be properly covered when it comes to your liability protection. It's one of the most important things that you can have. There we go. I'm not sure. The slides are a little slower than I am tonight, which is surprising. So what does it cover when you have a claim? It's going to cover your fire and wind and hail, of course, vandalisms to a degree, broken pipes from appliances. There's a lot of things that are covered, and we're going to go over things that aren't covered as well. So it's really important to understand when an item's going to be covered and when an item's not going to be covered. Okay, liability. This is one of your absolute most important things that we're going to talk about today. When you get sued, if you are not properly insured liability-wise, you could not only never cash flow again on your property, you may lose your property. So things that can happen, your neighbor could come over, slip and fall when the water line broke, they're going to sue you. Okay, maybe you leave your sprinklers running all night, floods the neighbor's home next door. That's going to be a huge expense. You don't want to wrongfully evict a tenant. That's another reason why you would have a property manager. But your liability will cover that as well. Okay, here's a policy, and this is an actual policy. This is for a property we wrote for a Marshall Reddick person in Austin, Texas, single-family home, built in 1998, so it's not too old, 1,626 square feet. So we have a calculation, and we'll get into that in a little bit as well, of how we determine what your replacement cost is. And replacement cost is exactly how you're going to rebuild your home in an event. This particular one, they're saying it's $213,900 to replace that dwelling if it burnt down. Okay, we've added in what's called the rent-ready personal property. Like I said, that's your dishwasher, stove, loss of rental income. Now that's the 10% we were talking about that's set in there. And that's if your home burns, say the kitchen burns down, your tenant's going to move out, go over to the Holiday Inn and stay because they can't stay in your rental property, and the insurance company is going to actually pay you the monthly rent. And so you need that coverage, liability protection like we talked about for a lawsuit, medical payments, and then your deductible. And one of the things that we do with our Marshall Reddick clients, we know you're looking to cash flow. We work with your deductibles. So this one's set at $2,000 and a 1% wind and hail. We'll look at that. We'll do a couple of different deductibles, see where the best rate is for you and the best way for you to cash flow.
And part of what you're going to see here is when we were showing that to that customer there in Austin, we showed him a very good policy, but what we're going to show you is even a better policy. This is what we try to put together for you at all times. The policies that we were previewing there, like I said a little bit ago, is really what you're going to call when you dial around dialing for dollars. But this is, we put a program together very specifically for the people that work with Marshall Reddick to really go beyond what that policy will offer. And Mike will share that with you here in just a second.
Yeah, we work with several different carriers. We're a brokerage, but the primary one we work with is Safeco Insurance. They're a great company. This is actually the policy that they offer. And if you remember on the last slide, you didn't have the extended replacement coverage of an extra 25%. So when the home, say, burns to the ground and you're rebuilding it with a replacement cost of $213,000, if anything runs over that would come out of your pocket. With the Safeco policy that we give every Marshall Reddick client, has the extended replacement coverage, gives you another 25% to cover anything that could possibly happen. Then we've got all the basics here, your loss of rental income you want, liability protection. Now on the last policy, the liability protection was $300,000. You really want to have $500,000 of liability protection, and the difference in that is only a few dollars a year.
Basically, it's a Big Mac and a Coke.
It really is. It's a couple of dollars. And then on top of that, you'll want to drop an umbrella policy on that to really protect your assets, and we'll get further into that. Okay. Then you want to do your extended liability protection that you didn't see on the last policy, and that's $500,000, and that's for your property manager to protect you and your property manager. Then you're going to have your medical payments. Then on the last slide, you didn't see law and ordinance. Now, what that is, every city and every county changes their building codes from time to time, some more often. If you're in Newport Beach, it might be every 6 weeks. And basically, if they decide a GFI or an outlet needs to be updated, they're going to change it. Now the code's different. When your rental property burns down and they do the replacement of your property, they're not going to do the law and ordinance. That's an additional expense that'll come out of your pocket if you don't have this coverage.
What's really nice about our Safeco product is you'll find a lot of companies that have elements of these 3 or 4 things we've mentioned here, in addition to the regular policy, but you will find very few with all of the elements. And this is a very first-class yet competitive policy for you. You can feel great, and it does happen. Occasionally, houses cost more to build than they're insured for. Most companies are going to make you pay the difference. We're going to show you an example in just a few minutes.
Right, and as you see here, we've changed the deductible from the 2,001% wind and hail to 15 to get a better rate for you guys and allow you to cash flow a little better. And of course, then at the bottom you'll notice save up to 5% when you package. Well, of course, if you put all your insurance together with one carrier, it's definitely going to give you discounts. If you place your home with Safeco when you have a landlord policy, every landlord policy will get a 5% discount with that. Okay, so some endorsements that we just talked about that you get with Safeco. You know, you're going to get your replacement coverage and not actual cash value. And we'll get into what actual cash value is in just a little bit. You really do not want to insure your properties that way. You want to go with replacement cost. Okay, then you got the extra 25%, so you get 125% coverage of your property to rebuild, and your law and ordinance. These are 3 items that you absolutely want to make sure that your policy has.
Yeah, we're kind of pounding that on you a little bit, but we want to make sure you're aware of this because these 3 elements are really what makes up an actual replacement cost. Without all 3 of these elements, you're going to pay out of your own pocket if you have a serious fire.
And if you're paying out of pocket, you're not cash flowing.
And this is a great example of what we're talking about.
Yeah, so here's our scenario. Your home burns down. Your replacement cost coverage is $166,000, okay? Well, they go in there, they rebuild the home. Unfortunately, as we talk about, expenses go over. The actual cost to do the home was $196,000 because that includes some of the building code changes. Now, your typical policy is going to pay you the $166,000 that you're covered for to rebuild your home. Safeco, you've got all the building code upgrades. You've got your 125% additional replacement coverage. Safeco pays you the full $196,000 to rebuild your home, put it back to code, and you don't lose a dime. They're paying you while your renters are at the Holiday Inn, and you're paying your mortgage by the insurance policy, paying the amount each month, and then your home's rebuilt, you have new tenants, and you're cash flowing without any amount out of your pocket. Now, if you just had the $166,000, the additional amount comes out of your pocket. You'll never cash flow on that property again. Okay, so additional coverages, the rent-ready contents that we talked about. Okay, that's your stove, your dishwasher, things like that.
I'm going to jump in on one thing on that because I wrote in some words here about pack-out. This probably is a little more applicable to your owner-occupied homes, your own homes, but this can happen with a rental as well. What the insurance company is going to do, and we try to set a high $4,000 value. might want to consider going higher, because what the insurance company will do is when they move stuff out, if you have a back kitchen fire, everything's going out the door and they're going to pack it away. They will take the extra time and they will charge for the extra time to itemize every single piece of property that they're pulling out that's going to go back in again. If it's only 4 or 5 pieces, not that big of a cost. If you've got 20 or 30 pieces of contents for a rental property that are going to pack out, they're going to charge you. My own sister had a situation. Again, she lived there. There was a $25,000 pack out and put back charge applied against her property. So this is real stuff. You need to be aware of these things. So when we're setting values kind of on the high side for your rent-ready contents, there is a reason we're doing that.
Yeah, we really look at your property and how to best protect you all the way around. Just like the next one, the loss of rental income. We're going to look to make sure that it'll cover your rent up to 12 months in case it takes that long to rebuild for some reason. The average is a 10% of the dwelling value. Well, there's times we'll look at that. We'll ask you how much you rent your property for, and we'll increase it. Instead of 10%, we'll take it to 12 or 15, whatever it's going to take to cover you for 12 months. Because once again, once you have that kitchen fire or the house burns down, tenants move out, you're not getting rent, but you still have a mortgage to pay. So make sure the insurance policy is paying your mortgage when that happens. And then we get back to debris removal, much like Stan was talking about. You want to be covered for these things, and we make sure they're part of the policy. Okay, coverage exclusions. This is really huge because a lot of people think when you buy an insurance policy, what does it cover? Everything. No, it does not. Okay, an earthquake policy. That is going to be an absolute separate policy. A flood policy, separate policy. All these things that you see up there are things that are not going to be covered by a basic policy. Okay, freezing of pipes while it's vacant or unoccupied. You want a property manager there to make sure if your property is vacant, it's protected from claims while it's vacant.
One thing we want to emphasize on that is you have coverage if a tenant is living in the home, the pipes freeze and they burst. That's just called bad luck. And one of these Arctic freezes. But what's really important to know on this particular exclusion, you'll find in the policy, from the first day of vacancy, if it's in a freeze area, if they have a really bad cold snap and that water is running and the pipes burst, there is no coverage unless you've taken steps to winterize. And you have to make sure you have a great property management company like the Marshall Reddick Group or the people they will designate in certain areas that know that they have to be out there as the people are leaving to turn off the water properly or heat the property and keep it heated so that there isn't a chance of a reasonable, rather they reduce the chances of having a pipe burst. Important stuff to know. This is stuff that no one talks to you about.
Right. A lot of times when you ask your insurance agent to give you a quote, they're just giving you the lowest rate to get your business. They're not really trying to protect you, educate you. Our job here and Marshall Reddick's job as a property management company is to educate you and make sure that your asset's protected. The last item here is the backup of sewer and drains. In some states, you can actually purchase this as part of your landlord policy. Other states don't offer it. Most policies will not give you this. If it's available, we'll ask you if you'd like it. And I'll tell you what, a lot of claims are due to backup of sewer or drains. And if you don't have that coverage, it's coming out of your pocket. Okay, more exclusions. Well, there we go.
Yeah. Oh,
maybe.
There we go.
And there it is. Sorry, got a little tricky finger here. Okay, pollutants and mold, kind of an obvious one. Settling or sinking foundations, damage to unattached buildings. Property management, if you have a good property manager, they will notice some of this stuff. They will educate you on it, and they will let us know about it.
Something that when we're talking about unattached buildings also, the obvious thing that we're looking at is if you have a garage that maybe has been converted to a secondary unit, you're going to have 2 policies at that point, one on each property. Or if it's just a garage sitting there, garages sometimes burn. People put crazy things in garages. Goodness, Michael, rags, solvents, gasoline, mixed with the barbecue and the propane, and they explode. And sometimes bad things happen to garages. You've got to have enough coverage. we're used to seeing, and you're used to seeing, garages that are attached. But when you get into older properties, typically 1970s and older, you're going to see unattached buildings. And if you want coverage for those, the policy is somewhat automatic. You want to tell us about it, but if one of your tenants is running a auto repair business out of that detached garage and he burns it down, there's absolutely no coverage for you.
And that's another reason for a good property manager. They would go out there and inspect the property, realize they're running an auto shop in there, probably have a huge heater in there going 24 hours a day, and they'll let you know that it's not covered and you need to correct that. The last item on here is dog bites. I actually just went through this recently. Super important if your tenants are going to have a dog. There are certain breeds that absolutely are not going to be insured. They're going to be exclusions to your policy with just about every company. Safeco's a great company. They only have maybe 10 to 12 dogs that are excluded. So we would let you know, are you going to have a renter with a dog? You know, let us know what type of dog. We'll let you know if it qualifies or if it's excluded. So it's super important. Of course, your property manager, when he visits, will let you know if there's a dog there or not. So it's super important to have a good property manager.
You'll notice there's a theme running through here.
Yeah.
And that's property management. A lot of exclusions and policies, your property managers can actually steer you away from these. So much of what you have to worry about within a policy, again, I'm repeating myself, but this is important. Your property managers will keep you out of trouble. They'll steer you away from most exclusions just by being there and by watching your property, something that you can't do unless you live next door.
That is true. Now, the next one, the damage by pests, I've actually had people call and say, I have termites. Is it covered by my policy? No, it is not. Mice in the attic, not covered. But if you have once again, you have a property manager, he's going to be out there. He's going to let you know, hey, I think there's rodents in the attic. Let's take care of it before it becomes a big issue and a huge claim. So there are things that you can do to try and keep these exclusions from happening. Obviously, theft of things that aren't permanently installed, your maintenance and municipal issues. Wear and tear is not covered, normal wear and tear, but your property manager can keep going in there and letting you know when the carpet's getting old or if they're damaging it and not taking care of the property. Okay, here we go. The fun one that we're up to, especially here in California, Oregon, or Washington, illegal manufacturing. Okay. It's pretty clear in your policy, but a lot of people don't realize illegal growing of plants is an exclusion. If your tenant is growing illegal plants, and even though it may possibly be recreational, it's not legal federally, your policy will not cover that.
Yeah, we're not talking azaleas here, by the way.
No. I think we're all on the same page, but if it's an illegal manufacturing that's going on, be it chemical, be it plant, be it whichever, you will not be covered. Your home burns down and you have no coverage because you didn't have a property manager that went out there and said, hey, they're growing these giant plants in the garage, it may burn down. So things to keep in mind. Okay, hints on when you should be concerned. Now, this is something we came up with because a lot of people go, how would I know? And of course, my first answer is always your property manager. But if you happen to go out to visit your tenant and they won't open the door, don't want to talk to you, you mentioned that the utility bills are high for some weird reason, they've tripled, that's a red flag, okay? If you accept a 1-year cash advance for rent payment, you are crazy, okay? If they're paying in cash, there's probably a problem. And if you take 1 year's cash up front, you can never evict them for that year. You've accepted them for 1 year. So make sure you never do that, okay? And once again, we're hitting on the note of the property manager. We work closely with Scott, who is running the property management side for Marshall Reddick. He's incredibly knowledgeable on this. He will spend hours with you, explain to you how that works. I worked in property management for over 20 years. It's super important to have somebody knowledgeable and somebody that will actually look after your asset. Okay, I said earlier we have replacement costs. A lot of people wonder, how do you come up with that number? Is it a pie in the sky? Do you just look at it and say it's worth this much? do you look at, and I've had several people say, well, I'm buying the home for $300,000, I want that much coverage. Well, it doesn't work that way. We look at what it's going to take to rebuild your home. So we, of course, Marshall Reddick link, your Redfin, your Zillow, we go on there, we take a look at your home, we see how it's built, wood, brick, square foot. The age of the roof is super important. One thing to keep in mind, when you're calling me for a quote, I'm going to ask you, when was your roof replaced? Because it will affect how much the value of your home to be replaced is, okay? Number of stories.
Also, a big discount.
Oh, huge discount. It's amazing. If your roof was replaced in 2000 versus 2015, you're going to save tons of money for the 2015 roof. So a newer roof, better rates. We look at the bathroom count. We look at what your flooring is, because the difference between carpet and hardwood's a lot. You don't want to be underinsured and have your policy say that you have carpet when you really have hardwood floors, okay? You need to look at your porches, your decks. Do you have an HVAC system? You know, how's the plumbing? How new is it? We look at all of that to come up with the number that's going to take to replace your home.
So when we ask you for a copy of your appraisal or a walkthrough, this is the kind of stuff we're looking for.
Absolutely. And there's a couple reasons. One is to get you a great rate, and one is to properly insure you.
There we go.
Okay, liability. I said we'd touch on this. Liability is super important. Obviously, we know it's to defend you, to pay, your claims for any injury, things like that. But a lot of things people don't realize, and I just went over a claim with somebody today. When you call and you report your claim to Safeco, they immediately have an adjuster that steps in. They will talk to any attorney. They will talk to anyone involved, and you are taking a step back, and that stress is not on your shoulders, okay? Anytime that you're getting sued, they're going to take a look at your insurance policy and see if you're properly covered liability-wise. That's why I say get a $500,000 liability minimum, and then you're going to want to throw an umbrella over the top of that, which we'll talk about in a little bit, okay? The example at the bottom, the trip and fall on your premises, I can't tell you how many times, and I can give you story after story of silly things that happen. Guy goes out in the middle of the night, he forgot to lock his car, was running across the grass, and the sprinklers were going all night, slips, falls, breaks his leg. He's suing you. So you must have the proper liability coverage at all times. Okay, here we go again. If you have an expected or intended injury, it's an exclusion. I know that sounds silly, but if you intend to get hurt or your tenant wants to get hurt, it's not going to be covered.
This is kind of a fun claim. We had a situation where a guy was mad at someone who cut him off. It was an auto claim, but this is a good example of the expected or intended injury. He chased the guy down, cornered him, and he didn't assault him physically, but he started throwing water bottles at him. He kept pelting him with water bottles, and the police were called. They hauled him away, and he couldn't understand why his auto insurance didn't take care of him. Well, he effectively assaulted the person, even though he didn't physically assault him. So if you're doing something, like if you're trying your very, very best, somewhat covertly, to get rid of the tenant and they sue you for wrongful eviction, there could be an issue over expected or intended injury. Or if just, I think the words speak for themselves, basically, but be aware of that. So if someone is upsetting you, let it go.
Let it go. So the rest of these are kind of pointing out the same thing. You basically, you're not going to be covered if you're doing it on purpose. If you're breaking the law, your policy is just not going to cover you. Okay, here we go a little bit more on the liability. Your HOA loss, when you have that coverage available, and it's not available in every state, it's not available in every situation, but if it's there, you want to get it. Your liability is not going to cover your HOA loss.
The typical HOA loss might be this is another fun claim we had some time ago, was this what we called the happy friendly dog claim. The dog runs out of the house of the tenant, and he just wanted to jump up and say hi to the guy biking by him. Well, he jumped up, knocked the guy over. The guy became a paraplegic as a result of the dog knocking him off the bike. Family of the person who's injured sues the tenant. Tenant happened to have renter's insurance. He had $300,000. Basically, at that point, that tenant's insurance company wrote a check to leave. Then they sued the HOA and the property owner of that property. Through all of those people they sued, there was still money left over that eventually was owed to this injured party. And so the HOA, because they were the last court of resort at this point in time, had to assess each and every homeowner, whether they're a landlord or an owner-occupant, towards the payment of the final claim. Your loss assessment coverage is for claims that the association does not have enough insurance for. And they come back to you, and this does happen.
It does. You know, I'm going to skip down real quick because I know an important one here. It's the second from the bottom, daycare operations. Okay. We have had people call and say, I'm renting this property, they're running a daycare, is that okay? No, it is not okay. And that's why you have a property manager. Property manager will save you from 99% of the things that you see in front of you on the last few pages. So I know we've kind of hit a theme here, but part of protecting your asset is having a great property manager.
And to maintain that property management theme, I'm going to go two up from where Michael was to the workers' comp exclusion. I cannot tell you how many times I find out that, and just in casual conversations sometimes, or at the wrong time when there's a claim, that, and this applies really mostly to people that might have a 4-unit or a 3-unit, some multiple unit scenario. One of the tenants has been there a really long time, and they become basically like the de facto property manager. They're doing things for the property owner. They might be cleaning out an apartment when an apartment is vacated. They might be going out and getting landscapers for the property owner. If you're doing that, first off, don't do it. This is why this is our theme of property management. This is why you have property management. The Reddick people are not going to let anybody on the property, unless, who's going to work on the property, without showing proof of insurance. But this can really come back and bite you, because people have said to me virtually, that really should have been something that was covered when that person got injured in the property. Well, guess what? There are 2 exclusions in the landlord policy for work comp related injuries. These policies under the liability section do not pick up workers' compensation at all. It's not like your homeowner's policy, and even then you wouldn't want to rely on those. If you have people coming on your property on any situation, landlord or homeowners, make sure that they're showing you evidence of workers' comp and liability up front. Otherwise, it's going to be a very bad and expensive day for you.
And you will never cash flow again. So, and when we talk about exclusions, that's one of the reasons you want to have a good insurance agent that can explain all of this to you. Okay, so some insider tips for you. Okay, vacancy clause. This is one of my favorite, because all those years in property management and selling real estate, I never realized this till I started doing insurance several years ago. After 60 days of your property being vacant and unoccupied, you lose coverage on your policy. So if you don't have a good property manager getting your property rented again, and let's say 50 days go by and you're still trying to rent that property out, you need to call your insurance agent and get a vacancy policy, because once you hit day 61, take a look at what's not covered. Vandalism, glass breakage, theft, burglary. Remember, it's vacant. People know it's vacant. They're going to break in. And oh, by the way, fire damage is not covered. You need to get a vacancy policy and make sure you always tell your insurance agent when your property is vacant. Now, if you have Marshall Reddick as your property manager, they're going to notify us 45 days of that property being vacant, which I very rarely get a call because they're good at getting them re-rented. But they'll let us know. They'll put us on notice. We may need to get a vacancy policy. Now, once we put you in a vacancy policy, it's much more expensive. And the day that you get a tenant in there, we switch you right back to the current policy we had in place before. Okay.
We kind of covered this one.
Kind of covered this one. Burst on the broken pipes, the vacancy clause. The solution is talk to your property manager, talk to your insurance agent. They're your 2 best friends. Okay, earlier I talked about actual cash value, the ACV, okay? Actual cash value, a lot of people will insure this way because they save money. And of course they do, because they're not properly covered. And if you do actual cash value, you could possibly not cash flow on your property after a claim ever again, okay? So here's how it works. Claim's $100,000. Actual cash value policy takes all the depreciation into account. Home is 40 years old, so they deduct $30,000 and pay you $70,000. Where does the other $30,000 come from? Out of your pocket. So I hope you had a super cheap insurance policy, because $30,000 is a lot to come out of pocket. If you do replacement cost, like we keep telling you, then your claim is going to be fully covered. You're going to get $100,000 put back into the home, and you can rent your home right back out again, no loss whatsoever.
With $100,000 of upgrades.
There you go. Okay, I touched on this earlier, and a lot of times when we're sitting here doing your quotes for you, I'll plug in your quote, I'll look at what it is for a $2,500 deductible, maybe a $15,000, etc. Okay, there are sweet spots that get you the best rate with the best coverage for your asset. Normally on a 1 to 2 unit home, it's about $2,500. Of course, we will look at other options for you. Once you get up to 3 or 4 units, you want to go up to about a $5,000. That's where you'll get the price break, because you definitely want to cash flow, but you want to be protected as well. The insurance company feels that if you're taking a risk, they're willing to give you some reward, so it's super important. Wind, hail deductibles are typically 1 to 2%. We try to keep them around 1%, but if the price break is so great and you're going to cash flow better, we'll look at the 2% and talk to you about it. All right, where you buy affects your costs. That is so true. It's one of the most important things. Okay, if you're in a coastal area, let's say you're in Florida right now, your rates are probably going to be a little bit higher than everywhere else because there's claims. Okay, tornado, hail areas, going to have claims. You're going to pay more. Okay, Houston, Florida, Georgia, the Gulf Coast, those are all going to cost a little bit more to insure than other areas. Okay, lower rates is what you want. Let's take a look. Austin, Clarksville, or Oak Grove, Arizona. Okay, California, except for when you get up Northern California, certain brush areas, Indianapolis, Boise, Las Vegas. Okay.
And oops, Florida. How do we do that,
Florida.
Michael?
Well, Florida's a funny one. I will tell you right now, every place on here is where Marshall Reddick has properties, and we're insured to insure you. However, when they do Florida, they're not doing the areas that are getting hit with large claims. Marshall Reddick does all the homework for you. They find areas that are safe, that will give you good insurance rates, and will cash flow.
Yeah, they're on the Gulf side, not on the east side, where the bulk of the claims come into Florida. The Reddick properties have had amazing success throughout some very severe situations.
Okay, what you buy affects your costs. Kind of hitting a theme on this one as well. Obviously, if the property's newer, you're going to have a lower cost because there's not going to be as much to go wrong. Roofs, we talked about this. If your roof's 15 years or older, it's going to cost you a lot more. That's why when we do your quote and we say, what year was your roof put on? It's a super important question. It will get you a great rate, okay? And keeping it within a 3 to 4 bedroom home, 2.5 bath, up to about 2,800 square feet is where you're going to get the best policy and cash flow. And son of a gun, that's pretty much what Marshall Reddick offers you guys. You get into bigger homes, more bedrooms and baths, you get more people, more wear and tear, more issues.
More insurance.
More insurance. No pools. Okay, a lot of people go, oh, my rental property is pretty, it has a pool. Yeah, super high because now you got liability issues. Even if it's fenced, your neighbor could climb the fence, which has happened, fallen and broken their back, which happened on a claim, and that homeowner, that actual landlord, was responsible for that claim. So pools are a bad idea, and clue is what we call it, but what we do is we run a quick history of claims that were done on your property. If that property has a bunch of claims, your policy is going to be a lot higher than if it doesn't.
And one thing we get as a byproduct of running this is if you buy in certain areas that we know that have had bad hailstorms in the past, we'll look at the year of the roof repair. If there's a roof repair and from a claim that occurred in April of 2016 in the San Antonio area, we know that you probably have a new roof, which will give you a discount. So there's a lot of reasons we run these for you.
Okay, personal aspects of insurance. Insurance score. The only state that does not run an insurance score is California. And basically an insurance score, just like when you're buying your home, we're looking at your credit, we're looking at claim history. So that's super important. The better your credit, the better your insurance rate, as funny as that is outside of California. Okay. Here's another item I didn't know all those years of doing real estate and property management. If your mortgage company is paying your policy each year, they pay it in full. Well, you get a discount when you pay in full. So the insurance company gets paid in full, gives you a discount for that because your mortgage company paid it in full, but you're paying them monthly. So basically it's a freebie. So the best thing you can do is have your mortgage company set up an impound account that pays your insurance every year in full, and you get that discount. On top of that, you're not going to forget to pay your insurance policy and have it canceled because your mortgage will pay it, okay? But another side thing of that, make sure if you change mortgage companies, you let us know because it will send the bill to the mortgage company. That's the wrong company. They won't pay it. You get canceled, okay? And then the number of units. You know, many insurers won't offer policies if you have more than 6 or 10 units. Safeco we have an exclusive deal with them. We can do up to 23, 24 units for you, no problem at all. We can also do an umbrella for you up to 22, 23 units, no problem at all. Most companies can't do that. All right, tenants and dogs. I just went through it today. The key to keeping your asset as nice as it can be, have your tenants get a renter's policy. Okay, let's say that pipe breaks and floods the home. None of the personal property in there that belongs to the tenant is covered. They must have their own policy. Okay, if they have a dog, their policy covers that dog bite. Okay, you want them to have $500,000 of liability coverage, but you want them to have a renter's policy for their protection. And we really find that when you do that, they seem to take better care of your home. So it's good for your asset. Okay. Try to avoid renting to tenants with dogs, especially if they're a certain breed. Your policy will exclude the coverage altogether. So definitely let us know if there's a dog there. Okay. Your property manager will let us know if it's Marshall Reddick. So a good property manager will just contact us, say, oh, by the way, there's a pit bull in there. You might want to let the homeowner know he's not covered. Okay, the tenants themselves. Always make them buy renter's insurance. It's number 2 thing again. Here we go. You're not responsible for their items, like I said earlier. So it's important their property is protected. It's important their liability takes on some of your issues too. Okay.
And this kind of goes back to something I jumped in on a little while ago about the tenants and that little tiny thing we mentioned called pack out. We had a claim recently in a property where the tenant who swears he didn't do it, but we know he started a kitchen fire. We just can't prove it. So anyway, that unit, that entire living unit had to be, a tenant had to move out, plus all of his stuff had to be moved out. He, of course, is asking us, rather our landlord, to pay for his rent at the Marriott Residence Inn and to pay for his for the damage to his property. Well, we know he had a Liberty Mutual policy, so we told him to go call Liberty Mutual and get it taken care of. But remember the thing I mentioned about pack out? We actually waited 10 days to fix the property. 10 days in which, you know, we're paying you rent, so you don't have to worry about it. But this tenant was dragging his feet. We waited 10 days before everything was contracted, and the tenant's property had to have enough coverage to pack out his stuff and pay for his damaged stuff and then put it back in again. I know that's kind of a really minuscule little item, but that can slow up and cause a problem inside your claim. But I don't want to get into details in that except to say just make sure your tenant, like Michael was saying, has a renter's property for 3 things. Liability when they try to burn the place down, cooking, liability if they have a dog, and to protect their property and to have enough funds to pack themselves out and get their stuff put back in, because when the insurance company does it, they're going to itemize it. It's going to be very expensive.
Yeah, exactly. Now this next one, I love this. Okay, you evict a tenant and he vandalizes your home. 90% of the policies out there are not going to cover this. Safeco, the company we use for your landlord policies in most areas, they're going to cover a single vandalism claim. So your tenant moves out and he rips down the chandelier, throws a party, punches holes in the wall, drives his motorcycle in. Safeco's going to go in. They're going to look and see what was normal wear and tear, what's vandalism, and you get paid for all the vandalism and it gets repaired. So super important to know if your policy covers that or not. If it's Safeco, they do. Okay, loss of rental income. I touched on this. Okay, when your kitchen burns down and your tenant moves to Holiday Inn, you need to be getting that money back, okay, to pay your mortgage. Otherwise, you'll never cash flow. So super important. Once again, we look at what your loss of rent is versus the rent you're collecting to make sure those numbers balance so that you have proper coverage. Those are things to know and things to talk about. If you don't use us as your insurance company, make sure the company you do use gives you this coverage and gives you the proper amount of coverage. Okay, your insurance broker. Once again, okay, when you have your mortgage paid by your lender, it's important to let us know if you change your lender. Okay, that way, if your policy gets canceled for non-payment, we know ahead of time. We can take care of it. Okay. A lot of times they don't have the proper insurance. If you change to certain insurance companies, they might not contact your mortgage company. Safeco, ourselves, we always will. If you change your phone or your email, let your agent know. Let your property manager know. That way we can track you down if there's any issues. All right, tip number 10. I'm going to let Stan take this one because this is fun math, but it is true. There are times $1 million is less than $500,000.
Again, you see the difference here. Basically, what we're saying is that some companies will insure these the liability coverage for you under what we call a business form. Business forms will say we'll pay X amount of dollars maximum during the policy year. You may have a $500,000 occurrence, but you have 2 claims, highly unlikely, but you have 2 claims that max out. You have no more coverage for the rest of your policy year. Under our Safeco policy, each and every occurrence has $500,000 of coverage. So you could keep going if you really got into a bad situation.
Yeah, the odds are slim, but truly, if you had 4 $500,000 claims in a year, Safeco would cover each one. Okay, price, deductibles, we've been talking about it all along. And like I said, we look at your policy and we offer you different deductibles. Make sure you're getting a deductible that gives you the right rate so you cash flow. Okay? Make sure your coverage is complete. Make sure that you have the law and ordinance. Make sure you have loss of income. Make sure you have all that. And make sure you have a good property management company. It's really important to protect your asset, really important to cash flow, to have all of that. Okay, umbrella. I cannot talk long enough and loud enough about umbrella policies. If you just have basic, a home, a rental property, auto, it's going to be about $1 a day. Obviously, the more we cover for you, the more assets, the little bit higher it goes. Umbrella policy is exactly what it sounds like. If you open an umbrella, it covers you. Well, an umbrella policy covers all of your assets, okay? So it will cover your home, your autos, all your landlord policies. So let's say that you get sued, guy hops over the fence, breaks his back, sues you for $800,000. You have $500,000 of liability coverage. Where's the extra $300 going to come from? Well, hopefully you went and got yourself an umbrella policy from us for $1 million. That $1 million kicks in, and the full policy, the full claim is paid off by your policy. If you don't have that umbrella policy, your landlord policy is going to pay the $500,000. The remainder comes out of your pocket, and you'll never cash flow. Okay. We use a Safeco umbrella for all of our Safeco clients. It's what's called a real umbrella, which means it's worldwide. So you go to France and you're driving around in your car and hit somebody, your umbrella covers you. I mean, it's an incredible and a very cheap insurance policy. I recommend it to everyone, including young people. Here in California, they can attach your wages up to 40% in a lawsuit. So you're driving down the road, you cause a 23-car accident, you're sued for $5 million. They're going to attach your wages. You need an umbrella policy, and those attorneys will protect you in court as well. Okay, here we go. Bundle. You've heard everybody say it, from the lizard to the lady in white. Bundle your policies. Okay, get an umbrella policy for $1 million, $3 million, $5 million. We can write you up to $10 million. Put your car, your rental properties, your home all together, and you get discounts. When you add your auto onto your home, you get a discount. Add your landlord policy in, you get a discount. Put them all together, and these are the discounts you get. So we use Safeco primarily for your policies. We have a special deal for Marshall Reddick. We have a 24/7 live service center. We give you this number. You can call it 24 hours a day, 7 days a week, 365 days a year, and somebody will answer the phone. They're an educated person that can help you with any issue that you have. They will let us know the next day, and then we can contact you, or if they've taken care of your problem, you're done. Let's say that, oh no, it's 10 o'clock at night, I forgot to get the policy today, and I just closed. You call that number, they give you a brand new policy, you're done. And of course, we use travelers insurance in certain areas. If we can get you a better rate than the Safeco, we have a live number for them as well. They're 24/7, 365. And then there's us. We have two offices. We got one in Los Alamitos and one up here in Anaheim Hills. Stan's in his office pretty much 24/7. I work pretty much the standard days, but we are always on our laptops, always keeping track of emails. So if you need anything, we're around, or we have the 24-hour systems. So I know there's going to be a lot of questions possibly at the end. We're here for you. I'm going to kind of turn this back over to Daniel, and I hope you guys have enjoyed this.
Michael and Stan, thank you so much. Can't thank you guys enough for really valuable information in terms of protecting what for a lot of us is the largest asset we ever, or assets that we ever purchase. Guys, just so you know, and many of you are already working with Michael and Stan, we've been working with them, like they said earlier, for over 20 years. They're responsive, they're knowledgeable, and they're here to answer your questions. So we'll be following up afterwards. You can type questions into the question box on your screen as well. Before we wrap things up here, we do have one more poll. Just like last time, guys, this is completely anonymous, but definitely helps us understand you guys, our audience tonight, and how we can help moving forward. So second poll question before we wrap things up. How well do you feel your assets are currently insured? And like last time, I'll give you guys just a few minutes here, or about a minute. Ten more seconds here. All right, here we go. And it looks like majority of us actually feel that our assets are either underinsured or they're not sure. So this is a phenomenal webinar to have attended, and a great jumping off point to really discuss how you can get to a position where you feel that you do have proper protection, or you can increase your protection. So really, thank you guys all again for joining us tonight. We really appreciate your time. For a lot of you, it is getting late. Myself, Stan, and Michael, we'd all love to hear from you, get to know more about you, your specific investment goals, your current portfolio, what you're looking to accomplish moving forward. Here's my contact information. Like I said, we'll be following up. But Stan, Michael, I just want to say thank you to you guys for taking time out of your evening.
Oh, thank you, Daniel. We really enjoyed it.
Excellent. And Marshall Reddick investors, thank you so much as well. For now, have a great evening, and you'll be and we look forward to speaking with you soon.